So in the last video, we explained the outstanding wages outstanding and the salary outstanding, and now we are continuing with the question. Come to the next adjustment, which is rent paid in advance. Okay, rent paid in advance. So we have to check the concerned item in the in the trial balance, and if you check the list of balance, you can see there is a rent, and one more item is there, rent received, isn't it? So rent and rent received are there. Here the adjustment is rent paid in advance. Okay, when an item is simply given, it is an expense. If rent is given, obviously it is rent paid. Okay, and if it is a receipt, then it will be specifically stated in the question, rent received. Either that amount received, or sometimes it may be shown within the bracket, credit item. The symbol of credit item is CR. It will be noted in the bracket. When an item is specifically noted with the creditor, then you have to understand that it is an income. Okay, and if an item is given simply, then it is an expense. Rent means it is an expense. It means rent paid. If you note this trial balance, you can see commission. So there may be a doubt that whether this commission is received or commission paid. Since it is given just as commission, it is an expense. That means it is commission paid. If it is commission received, it will be specifically stated in this question that commission received or commission credit balance. We already discussed that all incomes have a credit balance and all expenses have a debit balance. I think you remember that we discussed this in the last video. Okay, so come to this adjustment here, rent paid in advance. The concerned item of rent paid in advance is here, which is rent. Okay, then what is the treatment of this paid in advance? Paid in advance means the expense of a future period is already paid now. Okay, actually it is to be paid in a future period, but we paid it in advance. So such item is sometimes called a prepaid expense or unexpaid expense. That means prepaid rent or unexpaid rent or rent paid in advance. Everything means the same. Okay, here it is said the rent paid in advance. So what is the treatment of this paid in advance? I give a general statement that any expense paid in advance in adjustment must appear in two places in the final account. One is, it should be deducted from the concerned item in the trading or profit and loss account. Here rent paid and its concerned item is this rent. This is an unmarked item. That means it is to be shown on the profit and loss account. So while showing this rent in the profit and loss account, you should deduct this rent paid in advance from this. Okay. Then, since it is an adjustment, it must appear only one more place, which is asset side of the balance sheet. Okay, and if you refer the format of balance sheet, I had given a format of balance sheet to you, and if you refer that, you can see on the asset side there exists an item prepaid expense. This prepaid expense are sometimes known as unexpaid expense or expense paid in advance. Okay, so this prepaid expense should be shown on the asset side. We already stated this in the format of balance sheet. Okay, so here this rent paid in advance should be shown in two places. One it is to be deducted from the concerned item, the rent concerned item in the profit and loss account, and also shown on the asset side of the balance sheet. Any expense paid in advance should be deducted from the concerned item in the trading or profit and loss account and must be showed on the asset side of the balance sheet. Okay. Similarly, another item, interest receivable. Interest receivable means it is an income, isn't it? As it is stated, it is receivable. It is a receipt. It's an income. So we have to find the concerned item. Here it is, interest received. So this is the concerned item. And you should know, you should not think that interest receivable, it's an income. As it is receivable means it is outstanding. Okay, we have the eligibility to receive that, but we didn't receive it yet. So it is just an opposite of expense outstanding. It is income outstanding, and we already learned how to treat expense outstanding, isn't it? Here it is income outstanding. When there is income outstanding, it should be added with the concerned item in the profit and loss account, and must show on the asset side of the balance sheet. Okay, if you refer the balance sheet, it's a format. You can see an item outstanding income. You can see that outstanding income. So if there are any outstanding income, that should be shown on the asset side, isn't it? So this interest receivable is an income outstanding. So it must be added with the concerned item. Here interest received is there. While writing this interest received on the credit side of the profit and loss account, this interest receivable should be added with this. Okay, and thereafter the same amount, this amount should be, this 100 should be shown on the asset side also. Okay. See, after explaining this question, I provided the answer also. At the time of answering this, I will make it more clear. Okay, how to treat these items in the respective statements. Okay. I continue this explanation in the next video. Okay, because this is a lengthy one. Continue to see in the next video.